What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. Before we get going, I'd like to make your attention to the newsletter that's begun if you're interested in receiving 5 to 10 stock picks a week that I send out in a weekly newsletter that goes out on Sundays. So today, head on into the description of this video, sign up at the link there on the website, just scroll to the bottom and enter your email address, and I'll send that out to you tonight. Without further ado, let's get into the weekly watch list where I do a technical analysis on these tickers here on the left. We have the broad market and then some companies to get through. So let's start off with the SPY monthly chart. Alrighty, so we look at the monthly chart whenever a month has finished, and last week we did finish a month. So now that the July bar is in, we can look at that, and as we see, we have an inverted hammer candle here right at our resistance trend line. So this to me signifies that the market is sort of topping out here at our upper resistance trend line, which we did expect. We broke through the $300 level and ran right into our resistance there around 302. So it's no surprise that we're seeing a bit of a pullback in the market here. So that's our monthly bar to look at. We'll switch down to the weekly. The weekly bar is a little bit telling as well. As you can see, our resistance here led to a big sell-off week with the FOMC and the tariff news. Put the market a little bit lower, but we are still above our 290 support. And if we go even down one more to the daily, we'll see that before we got down into that key support level that we were talking about in last week's video, the 50 SMA started to prop the prices up. So this is a reason why I believe that, we might see some sort of little bounce here, maybe a bounce back up to retest the 296 level from below. If we see a bounce and fail here, then maybe we are going lower and we target this low down here at 272.83. That wouldn't be too far-fetched. This might be a turning point in the market. Again, we did see that monthly bar, a little bit of an indecision up here at our resistance trend line. Whether or not the market pulls back a little harder could certainly be in store. Again, we do want to see our lows maintain above this trend line, but if that does fail, like I said, this is our next key low down here that we do need to maintain, which is at 272.83. Any sort of bounce to the upside, again, we're looking for a retest of 296.30. Anything after that, if it does continue to go, our 301.17 level has acted as clear resistance here, and we do have our all-time high there at 302.23. So keep those two levels in mind on the upside. If for some crazy reason we do some crazy bounce in the upwards direction and push up higher. All right, QQQ looks very similar on all those time frames except for the daily. We can see that our bar here hasn't quite gone through our 50-period SMA as much as it did on SPY, so more support here, indicating to me that prices don't quite want to go lower yet. Again, a little bit of a back test of this level in here at 190, 126, or something in here at 188 could be in store. Some little back test move in the upwards direction before we go down lower and check out some of this levels down here around 182. Anything lower than that, I could see this support down here coming into play. Depending on how volatile things get, how nasty the market gets, we could make it down here in a hurry. That's at 169. And then I would also call this point here support before we get there. You can see there's pretty poor structure here, but there is some structure around this level here at 178.06. Alrighty, I'm leaving this a little bit zoomed out so you can see our downtrend line. We didn't break it, although we thought we were going to at this point when the market FOMC meeting happened and then tariff news just drove prices, like we said, downwards. So we got the fake breakout here on, what would this be, Wednesday. Fake breakout, boom, people thought we were going to go. We didn't get quite through our thick resistance zone that we've talked about in the past. These two lines seem to have really been pushing prices down here on IWM. So again, getting pushed down. However, we are seeing support like we are in the other major indexes at our 50 SMA, and this one even our 200 SMA and support point down here at 151. So I would not be surprised at all to see IWM have a little intraday bounce tomorrow, maybe something to come back up and retest this level. It's been really choppy. You can see we have a day up, a day down, a day up, a day down. No one really knows the direction at this point. So a little intraday bounce based on this hammer candle at support and our 200-day and 50-day SMAs, although keep in mind that our red volume is really coming in and we could see a flush all the way back down to some of our lows as we talked about in the other indexes. 144 could be in play, 148 certainly within the upcoming week. Alrighty, jumping into our companies now, starting off with Apple. You can see we sort of have a double top here from earnings. We had a top here, then another top here, and I'm calling this a double top just because we had no closes in the market above this level. You can see we opened here, rallied a bit, and then closed well below. Same thing here. Opened, rallied a bit, and closed very well below. And we're seeing, again, a hammer candle forming sort of around an area of support based on our chart here. So we could see a pop here. Again, after 3 days of intense selling, it wouldn't be surprising to me to see some sort of break, some sort of breath here, where we see a small move in the upwards direction. And then depending if the whole market wants to roll over, we kind of have to think of the long term here. Apple could potentially get back all the way down into its trend line here. This one comes from, if we zoom out a bit, our lows down here from January, and then connecting that to our June lows here. So that's what I'm seeing on Apple. Again, hammer candle, a little bounce on a breath. However, I wouldn't be surprised if the whole market starts rolling over again to see Apple potentially fall back down to some levels in here around 195. The trend line would put it, somewhere between 185 and 190, depending on when it got there. But again, keep in mind these moving averages as support on the way down as well. On the bounce to the upside, I wouldn't be surprised if we don't hold anything over 208 or some of these highs in here, which are right around 210. Netflix had a big gap down on earnings, as we had talked about, and then the 200-day SMA totally just shot the prices down after we started to fill the gap slightly. So that being said, with the market positioned as it is, again, wouldn't be surprised to see Netflix see a little bit more blood, send prices a little bit lower. Again, we do have that hammer candle. Maybe we want to see a little bit of a bounce here before continuing lower. But again, I think the move is lower here, considering that we couldn't even fill the gap or get to 50% of the gap, which would have put us somewhere in here. So keep in mind the $300 level on the low side, which I believe we have support just below that, coming into play at 296. Yep. But the $300 level certainly could play before that. And then certainly if you see a cross below our lows here, a little double bottom here at 305, 306, I could certainly see going short there, targeting that $300 level for a $5 move in the downside. That being said, again, we have to get there first and see some bearish sentiment, and then that move might happen. Same thing here on Tesla, big gap down, started to fill the gap. We got about 50% of the way before we sort of backed off a bit. I would say this one's a little bit more bullish than the rest, just because we aren't as low. Also, we had a green day here on Friday, whereas most of the market had a red day. That being said, we could see a little bit of a retest of the gap fill if we see more continuation. The key would be to take out this high at 246, 247 just about. We'll draw that level in as a reminder if we approach that. Any move significantly through that, if we see bullish signals going through this 246 level, we could target the gap fill there. However, if we see a negative reaction at this level as resistance, then certainly look for it to roll over and move back down and possibly test the low here. This support level comes into play at 221.90. Baba reacting terribly to the tariff news as well. You can see just a massive ugly day there, but finding support at its major moving averages there. A little continuation there on Friday. I'd say things continue to get nasty for Baba. Never really showed good signs of a breakout here. So this would have been a nice little move to the downside to capture if you got in on some resistance up here. But the way it stands right now, again, not really exposing its hand too well. We have a lot of red volume coming in these past 2 days. I wouldn't be surprised if prices slowly move lower. But again, sellers might be exhausted after such a nasty move down. We might see some sort of consolidation underneath this 165 level, and then the move lower after it sort of takes a breath. So look for some sideways action, and then potentially going back down to 150. Facebook also falling off after its sort of earnings period here. No real gap in the chart. However, you can see we made the move up, found resistance, and now we're moving lower again. Again, with the whole market poised and looking like it wants to go lower or sort of go sideways for a bit before it continues lower, I wouldn't be surprised to see Facebook sort of do the same thing. If we scrunch the chart up a bit, we can draw on an uptrend just to make sure that we have some reminders for us if we ever get into key levels. If you do something like this, you can see there's still a little ways to fall for Facebook until we get back into that major support there. So depending on if this 187 level gives, we could see our support trend line come into play. That being said, we also have 174 just below it. That could come into play as a horizontal support before, or rather more importantly, than this uptrend. However, it'd be nice to see this uptrend hold, higher lows continue to form. Ideally, we want to see Facebook stay above 160. Anything lower than this, and the trend has been essentially reversed, and now we will be in a downtrend. So again, 160 the key level. We want to see a little bit of sideways action. Again, sellers are probably getting exhausted after this move down. Sideways action, and then a potential test of our trend line or this 174. NVIDIA had the fake break of the trend line, and now we're right back at it. We have a little bit of indecision here on Friday at our 50 SMA, and sort of around some just, a lot of data points here, our trend line, as well as just below our resistance here at 164. So that being said, again, the status quo, we're going to look for a little bit of sideways action. Exhausted sellers need to take a break. I wouldn't be surprised to see NVIDIA get stuck back below this trend line and see a move down to 155, maybe even 144, based on the intense pressure of the selling. You can see the volume has picked up in the seller's direction, but again, a little breath and a move down here is more than likely based on what we have here. ROKU is at a key support here. You can see how the 50 SMA on the daily has acted as support before. Bounce really started from here on the 50 and powered up, and we're sort of right there now. We don't have as nasty of selling, and we also have some smaller bodied candles inside of this previous candle. So this to me is implying that the sellers are sort of running out of strength. Buyers are starting to prop up the price. We are at the 50 SMA. I wouldn't be surprised to see some sort of bounce in the upwards direction and bring ROKU back to 108, maybe even 110. The all-time high would be a stretch. We couldn't really retest it here on this little bounce. So I would target potentially this one first at 111.59, that is. So potentially look for a move to this. If not, if we fail at any of these levels, look for a rollover and the break of the 50 SMA to get a little bit nasty, bring in more sellers and push prices down. We have $95 and then 86 on the way down. Microsoft still playing nicely. It's well within the bounds of the trend line that it's sort of been following. You can see we have a double bottom pattern forming here. We have a hammer candle, which would imply buyers stepping up, but that was preceded by a nice selling candle where there's plenty of sellers hanging out right around this trend line. You can see the upper wick is quite large. I wouldn't be surprised based on this hammer if we just, the indecision here, essentially we have a day down and then a day up, sellers, buyers. I wouldn't be surprised to see the price sort of go sideways around 138.25 and then potentially make a move back up, just following trend and continuing in the upwards direction. Our all-time high here is now at 141. If we break out of that, again, whole and half dollars on the way up. On the way down, we have 134 and 131. We would hope that we would hold 131 and sort of keep the trend in the upwards direction. Anything lower than that, we want to see this level down here really hold. That's right around 120 to 119. AMD, a little bit worse than NVIDIA and Microsoft. You can see we had more selling, but the pressure's tapering off. We're getting a smaller bodied candle here, a little indecisive. You can see we're sort of coming into a support down here at 28. So whether or not we get a bounce or some sort of resting period for the bears, just like everything else, we're going to have to wait and see. If the market wants to go lower, we see the resting period, and then a break of 28 would get quite nasty, put prices back down here around 24. You can see our 200-day SMA would also start to come into play if we got down into that area. Any sort of bounce to the upside, I wouldn't be surprised if we don't get above $32. So McDonald's is super interesting to me because although the market was selling, McDonald's had a really nice day here on Friday. So this to me shows relative strength. That being said, if we break out back above this 214 level, I wouldn't be surprised even if the market goes downwards. We see a continuation here in McDonald's and we go back up to test our all-time high here at 218, 219 just about. So a retest of the all-time highs because of this relative strength here. You can see the green volume is still relatively strong compared to some of these days back here. So buyers really pushing prices upward on this one. Try for a retest of our trend line that we've sort of been following. That would be nice. Again, 219 to 220 on the downside. If we do see a rollover, we have 206 or $200 on the way down. All right, we're going to draw in some trend lines here on Amazon. You can see we have something like this. And also now that we have two tops, something like this. If we zoom in, you can see we have a nice hammer candle off of our lower support trend line. That is the third touch on it now. So again, exhausted sellers, we might see some sort of bounce or sideways action in the upwards direction. However, if this gives, then things could get nasty and put Amazon lower. We would look to target our 1747 200 SMA first if we get out of this support trend line. Anything lower than that, we want to see this act as support in here. Our lows from here, which come into play right around 1675, we'll call it for round number's sake. So that's on the downside reference. On the upside, if we see any sort of bounce from the support trend line, we're looking at 1875. Anything after that, our 50 SMA will probably hold us down. As you can see, it acted as resistance twice here. So if we get back into that level, it's going to be right around 1897, 1900 just about. So keep that in mind as our key point and reference to the upside. Alrighty, that's going to do it for this week's episode of the Weekly Watchlist. Again, if you're interested in joining the newsletter, click the link in the description to the website, scroll to the bottom, enter your email address, and I can certainly add you to that list. For now, keep the things we talked about in mind. The market does look like it's poised to go sideways for a bit, exhausted sellers taking a breath, and then a continuation lower. So with that, I wish you a green trading week.